What is going on, everybody? Oh, we already have some comments in here. This is nice. My name is Dan Parker, if you do not know me. And today, the Fed chair announced a Fed rate hike that is pretty significant. And that's exactly what we're talking about today. We've had a crazy couple of years in the housing market. Home prices have gone up and up and up and up. And now we're starting to see some relief from that, from the mortgage interest rates going up over the course of the year. So how will this affect that? Nationwide, how is it going to affect it in our market? That's exactly what we're talking about. And I am bringing on my good friend, Derek Evans, to talk about that. How you doing today, Eric?
What's up, brother? Just trying to be like you. You know, I got the blue lights going in the back over here now. I got some
Did
cool
you steal
photos.
my blue lights? Dude, up in your game. I like it.
I was going to put like a little orange light to go with the painting there. My wife's grandpa painted that right there. So, you know, I'm just trying to be like you, Dan.
I love it, man. You know, I'm in this network of agents, real estate agents, and loan officers that do YouTube, and we all just help each other get a little bit better every single time. So I love it. I love to see that. And
you helped me a lot. Thank you.
So for anyone that is tuning in, let us know, just as we always start off, let us know where you are tuning in from. I like to know if we have locals, people here in San Diego, or people that aspire to come to San Diego. Just curious who's watching today. Before we get started, I have so much to talk to you about. I know we're going to get flooded with questions. I have about 10 articles that we're going to go over and debunk and discuss. And then we're also going to start to break down some local data that is actually proving the things that we were telling everyone was happening 2 weeks ago. So definitely stay tuned for that. But before we get started, Derek, I had this great video I was going to show Jerome Powell actually talking about the Fed rate increase, but I don't have that. And so I'm just going to push all of that hard work off on you. Tell us what is going on, what he said, and because he's not talking about mortgage interest rates, but it has an effect on mortgage interest rates. So if you could give us a little bit of clarity on the Fed increasing rates and how that will affect mortgage interest rates.
Yeah, so the federal funds rate, you think about it, it used to be referred to as the overnight lending window, which is basically the amount of interest that banks have to pay to borrow money from the Fed. And they can do it very quickly. They can get the money based on a certain amount of leverage for assets that they have on hand. They can get the money very quickly at that rate. So when you look at what does this affect when the Fed increases rates, what should we see? Where's that going to hurt us? It'll directly impact credit card interest rates, auto loan interest rates, personal loan interest rates, CD rates, those kinds of things. But you'll notice the banks do not want to and have never planned to give us the money back. So you'll notice that even though the Fed has raised rates, what's a CD these days? What's a savings account interest rate? Have they given us the interest back? They're not. They conditioned us on purpose. Okay, they conditioned us on purpose to get used to making no interest on our money, and I don't think they're going to go back from that. So that's what you should see, an increase in your savings account interest rate. You probably won't, maybe money market, so forth. But a lot of people confuse this with interest rates. In fact, I just read a post somebody posted about how the Fed raising rates is going to push mortgage rates up to X percent. And I'm just like, oh, where do I begin with this guy? It definitely does not impact in that fashion because they're completely unrelated. So overnight lending window to banks and 30-year mortgages, two very different things. So when you look at what affects mortgage rates, it's mortgage bonds or mortgage-backed securities. And those actually improved today. We got 47 basis point bump today, which is good. It's about an eighth of a percent or so, an eighth to a quarter, depending on things. It's not an exact science, but somewhere between an eighth and a quarter percent mortgage rates dropped today. And so that's the thing that, when I went on the news recently, that was my number one point. That I want people to understand this. Like, don't expect that mortgage rates are going to go up if you hear the Fed raising rates, because mortgage rates mostly are driven by inflation. If it's a free market where they're not being manipulated, it's inflation. If we have high inflation, mortgage rates will go up. If we have low inflation, mortgage rates will go down. Since we've had high inflation, mortgage rates have gone up. The Fed raising rates is actually deflationary, which helps rates go down. And that's why we saw rates actually go down today, Dan.
So you're telling me throughout this whole year, the Fed keeps raising rates and mortgage rates have gone up, but they're not correlated?
Right. So the mortgage rates started going up pretty much right on January 1st. It was
Hmm.
clearly a trade. Goldman Sachs was involved with this. I covered this on my channel. Goldman Sachs admitted that they had a huge second quarter, and they attributed that to their bond trading. So they basically just told us how they made all that money. And so, the big trade was on, right? They knew the Fed would tighten, but the Fed waited. The Fed waited to do this. They waited a long time to do this. They waited until March. They could have done it a year sooner, and they just raised a tiny bit, and then another tiny bit in April. So mortgage rates had already been going up. They're not connected in that sense. Mortgage rates have been going up from the very beginning of the year, really towards the very end of last year, but definitely at the start of this year, and they were sort of relentlessly going up. Now that the Fed is getting to the point where they're making big raises, 75 basis points last month, 75 basis points this month, you've seen mortgage rates have actually flattened. It has actually helped mortgage rates to stop going up. And so that is a definite good thing. And the real question is if they do start to peel back. So one of the things he said today was that, hey, we can probably decelerate a little bit here on the tightening, meaning we can loosen the grip. The Fed has got some tight hands now on the interest rate market and overall, economic policy, monetary policy. So they're saying, hey, he said, we might not need to do all this moving forward. We might be able to loosen the grip a little bit. We're seeing the positive effect that is the market on the markets from our actions. And so we're starting to see things improve. Job market's still strong. We're probably going to
say that for sure.
Grip. And that's why you saw the stock market take off.
Yeah, that was really interesting to see today. Thanks everyone for tuning in. Grown Up Gaming, one of our regulars. It's ridiculous to think the market priced in like 85 basis points. And then the S&P shot up just like you were talking about. We have Corey that is watching from Temecula.
Yes.
Christian, I want to know your real, brutal, honest thoughts on the rate hike. Will prices come down in San Diego? I'm on the sidelines, which is a fancy way to say that. Yes, absolutely. We are going to go deep into the local market probably near the end of this. So it's probably going to be in about 20, 30 minutes. We're going to dive into local data and tell everyone exactly what's happening. And actually, what I think is cool is we're going to show people what we were talking about 2 weeks ago that is now showing on the data based on our on the ground experience. So Don't you just love when those types of things end up working out, Derek? So people,
actually a lot, Dan.
I forgot I have this special thing planned for us today. So, we get a lot of comments on our videos. We get a lot of nasty comments on our videos, especially when we talk about the market, because everyone is an expert out there. So these are some of my favorite ones. I love this. You guys sound so much like stock investors. I've never experienced a crash. I haven't been in this as long as Derek, you have, but you've been through a major housing crash and you have experienced exactly what that's like.
I've experienced 9/11. I was in the business at that time. On that day, I was driving to a closing that day. So experienced that stock market crash, the Y2K crash as well, 2008 crash, flash crash of 2018. Yeah, seen some crashes.
And then we also have, which I think is my favorite, you have Daniel Chavez on here who says he's cannot wait to post a video montage of us talking about the market after it crashes. So if you actually see that in here, I liked it because I thought that was a hilarious comment, and I would like to see that montage. Derek, I don't know, can you hear? I think we're actually getting a real time. We can hear our crowd. Do you hear them? They're tuning in. That's the wrong crowd listening to us right now.
Dan, my first radio mentor when I was doing my daily radio show, she was my first radio coach, and she won the Lifetime Achievement Award for the Broadcast Institute. She said, you haven't made it until you start getting more negative comments. It's like, if the people are just loving on you and that's all you're getting, nobody's listening. Nobody's going to be listening until people start hating on you. And I remember getting my first piece of hate mail from the radio, and I was like, finally.
Yeah, we've made it, man. Here we are.
We're here.
I feel really good about this. Here's the interesting thing. Well, at the end of the day, I don't know what's going to happen in the market. You don't know what's going to happen in the market. Jerome Powell doesn't know what's going to happen in the market. Anything can happen over the next 12 months. Oh, you lost my face. Can you still hear me?
I can hear you.
Okay. That is a great screen to freeze on. Did it freeze on your end?
It froze on my end. Yes.
Okay. So yeah, we'll see what we can do there, or just leave it up because that's pretty funny. At the end of the day, we don't know exactly what's going to happen. We can make predictions based on what we're seeing locally. We can make predictions on the data that we're getting. And at the end of the day, it's just really interesting to see the comments that we get that people think market's going to crash 50%. They've been saying this for 10 years. Eventually, they're going to be right, but the market's going to go up probably 500 or 1,000% before it comes down 50% before that happens.
That's the hard part, right? And that I've seen a lot of agents actually telling people this, both clients that I've talked to, and also just online, saying, "Hey, wait to buy a house." And that's a dangerous thing to do, because if you look just historically speaking, you have to time that very, very, very carefully and accurately to tell someone not to buy a house, and then to tell them when to buy a house, because you can't just tell me not to buy a house. You then also have to tell me when to buy. Otherwise, I'm just locked out of the market. So it's a much harder thing to have success with, to tell people when not to buy a house, than to tell people when to buy a house if they have a long-term, outlook. That's really the key. If you have a long-term outlook, real estate will win. If you have a short-term outlook, you're a short-term trader, you're a flipper, something like that, then you need to pay a lot more attention to these things, and maybe you should be more cautious in markets where buyers slow down or whatever. But if you're buying a home to live in, the good news is that shouldn't be a huge concern for you.
No, that's a very good point. And again, we're going to get more into the market, but I think the sellers that are the biggest opportunities you have as buyers right now are the sellers that are desperate to get their home off the market. Whether it's, they haven't paid their mortgage in a couple of months and they need to sell their house. They need the money right away. Or if they are a flipper and they're just super concerned of having a bunch of inventory, or even a smaller flipper that has little inventory in San Diego, and they're selling their homes after $100 or $150 or $200,000 in upgrades they put into it, they have it on the market for like the same price that they listed it at. So yeah, there are definitely people that are in a situation where they need to get out of the market and they need to get out fast. But the general rule of thumb is time in the market is going to beat timing the market. So find a home, find a good deal for you, find something good for your family, and know that no matter what happens this year or next year, if you're going to be in this house 5, 10, 15, 20 plus years, you're going to see growth. You're going to gain equity. You're going to have a lot of opportunity and build wealth the way a lot of people built wealth before you.
Yeah. This guy's question here, they were just looking at Rancho San Diego. What's up, Christian?
Yeah.
I've heard a lot of buyers say this lately. A lot of buyers who referred to me, and then I contacted them, and they seem, pretty gung ho. And then within, a week or so, just kind of fell off the radar. Eventually, I find out a few weeks later, one of them poo-pooed it. Either the husband or the wife, whoever I wasn't talking to, said, no, the market's going to fall. We don't want to buy right now, or we're going to pass this time around and just kind of see what happens. And, it's perfectly understandable. People, if you don't feel comfortable doing something, then, it's okay. But just, you have to realize that you are still making a decision. And if you either own real estate or you are essentially short real estate. Mm-hmm. So like if you own real estate, then you're long real estate, you've invested in real estate. If you are renting, you are short real estate, meaning that you're betting that it's going to go down, but also with a guaranteed loss. So you're betting that it's going to go down. Let's say you're paying $3,000 a month in rent, $36,000 for the year. So you're betting that it's going to go down by more than $36,000. If that makes sense. So just from a very basic investment monetary standpoint, when you are either invested in it or you are betting against it, one or the other. So don't think that renting is some form of like abstaining and saying, oh, well, I'm just going to be neutral. You can't be neutral. Maybe if you live with your parents or something, you're neutral. But for most people, you're either renting or you're owning. And it's very, very clear which one is more beneficial.
And the one thing that you didn't bring up on that is that rents are going up. They continue to go up. I mean, and this is one of the problems about what's happening in the market, that all these headlines that we're going to talk about here in a couple of seconds, they don't talk about this, is that there aren't enough rentals, especially here locally in San Diego. And so those prices are going to continue going up and up and up because they have the demand. So if you are not going to buy a house, well, you're just going to make the rental market that much more difficult at the same time. True. Again, not everyone is going to have the opportunity to buy a house right now. I get it. Home prices are extremely high, and the demand has decreased for the biggest demand decrease for homes in San Diego are for the most affordable homes in San Diego, because it's of the affordability, where people that were stretching to be able to get a $600,000, $700,000, $800,000 single family home or townhome. So that's where we're seeing the biggest demand drop, because of affordability with interest rates rising. So I get it. It's not as easy as we're saying to just go out and buy a house. But if you are looking at it from an investment standpoint and you have the opportunity to purchase something and you're going to be here for a while, yeah, absolutely. There are opportunities, and it's worth considering all these different factors when you're thinking about this process.
Put it this way, 20 years from now, you look back at buying a house in 2022, you're not going to be like, damn it, why did I buy that real estate in San Diego in 2022? That is one thing I will guarantee you.
Yeah.
And so you won't be pissed about it down the road. So that's hard to do sometimes for most investors, to really forecast that far out. The only way that I can help you try to get perspective on that is to look back 20 years and go, okay, well, how were things in 2002? Or even 30 years, 1992. Look at some of those time frames and go, geez, wow. I mean, you could just pull up any chart, pull up any data you want. It doesn't even matter. When you look at those time frames, it's very, very clear where this is all headed. And unfortunately, Dan, it very well could be headed to the point where regular people can't buy houses.
Yeah.
Teachers and policemen.
Military.
Yeah. I mean, thankfully, military have the VA loan, right?
Yeah, that's
which
true.
gives them additional purchasing power for qualifications, and also lower interest rates, no PMI, no down payment. So that's a massive, massive help for the military. But your normal worker, someone who works a blue collar job, the garbage man, the person who's teaching your kids at school, these people need to buy houses too. And so, or they need to live somewhere at least. I'd like for them to be able to buy a house.
Yeah.
Will they be able to buy a house 10 years from now, Dan, 20 years from now? That I don't know. Yeah. Maybe not. But in San Diego, probably not.
I keep pushing for more density. I know that the NIMBYs are out there and they don't want change. And I get that. You don't want to be in a single family neighborhood and then your next door neighbor turns into a 36 story building that is renting out or selling condos or something like that. But the reality is we need more homes. We need more density. We need more ADUs. We need more multi-unit properties. I really, really am a big fan of the communities that have the beautiful mixed use, where you have the commercial on the bottom and then you have the housing on top, like Little Italy. I think there's plenty of opportunity for that all throughout San Diego. Maybe not everywhere, but in specific areas. And I think that's what we need in order to help get prices down, because supply and demand, there's a lot of people here. There's not enough new places being built.
But even if you granted that opportunity, Dan, here's the problem. Problem is the process to construct something new here is so expensive and so tedious and so time consuming. If you're a builder, you're millions, if not tens of millions of dollars into it before you have a chance to sell a place, and it's years. So that right there just sort of discourages, anyone from taking those things on. And so, there's a lot of things I think that would have to get fixed before that would even really be happening at scale. Because if they make 1,000 units here and there, it's really not much. It's not doing it. You really need scale for building. But it's also one of the things that's a great propeller for real estate values in San Diego. The lack of inventory and the lack of potential new inventory is there, and therefore the stuff that you have is in more demand because there just isn't as much of it. So if you have a house with a yard, man, I'm telling you, they aren't really building those anymore.
Yeah, I agree. All right, we're getting a ton of comments in here, and we haven't even gotten to any news articles. Let's try and pull these out. Christian is calling in from Rancho San Diego. Christian says, from Austin, wanting to move to 92103. Not sure if renting or buying yet. Whatever questions you have, definitely reach out. Let us know. Happy to help. Finding rentals is tough, and I don't have a solution for that, but I'm more than happy to give you some insights on the specific areas that you're looking in and things like that. I sold my home in Temecula in October and wanted to move back to San Diego, and I've been waiting for San Diego prices to go down. I'm just living with family, riding out the market. Yeah, I mean, I think we just went into a little bit of detail on how that could potentially be a bad idea to think of it that way. I will say at the same time, you know what? there are deals to be had right now. I've talked to 2 sellers that were so motivated, they were willing to discuss an offer coming in 100,000 under asking. Not that they were going to accept it. Not that every home is doing that. But again, if you find the right people, the right motivated sellers, then there are opportunities out there right now. But if you're waiting for things to come down 30, 40, 50%, I don't see that happening. Again, I could be wrong. I definitely don't see that happening.
Very likely not happening.
Derek, are you still sticking with your 6.5% mortgage rate prediction?
I think we peaked on this. So that was my prediction earlier in the year, that would be where we would peak, because bond investors would just find too much value in mortgage-backed securities if rates got any higher than that. And I think we did ultimately top out. I don't think it actually got to 6. I think it was at like 5.93 or something like that. I do believe that rates will go down from here. I don't think that, I think the worst of it from rates is behind us. Barring a black swan or some crazy something happening in the geopolitical landscape that causes more inflation fears to resurface. But I think that we topped out. Maybe we barely got to 6% or just right below it. And so I was about 0.5% off. Not too shabby.
Not too bad so far. I can pull this up because it's a lot less confusing than those crazy charts you lenders use with the bar charts all over the place. I'll never understand those. This I really like. So this is optimal blue, and this is showing the mortgage interest rates, and it has conforming, it has jumbo, it has FHA. So if you actually look right now, where we are today is right around the same place we were on May 6th. So from May 6th to today, things have gone up, they've gone down, but they've pretty much started to flatline. So it's going to be interesting to see, what happens from here, but that's what we've seen so far.
Yeah. You can see the rounding there, how it's sort of a rounded top, which is usually kind of a sign that whatever has caused this is sort of exacerbated. And now we're starting to see relief from it, which is exactly what's happening. So that makes sense. It looks like we topped out just above 6 there on the conventional side. Like right just over like 6.05% or something like that. So wasn't too far off, but yeah, I would say right now, Mantis, that we should expect rates to actually either hold or maybe come down a little bit. Not a whole lot of reason to be selling bonds at this point, especially if the worst inflation is behind us.
Bill is calling in from NorCal. Bill is in Danville, I believe. Thanks for tuning in, Bill. Good to see you, man.
I know where that is.
Victor, just tuning in. Hello, all. What is going on, Victor? Thanks for just tuning in. We appreciate that. My only comment is $65 too much for a mini box. Baby Clydesdale hot sauce is good stuff.
Thanks, Victor, for the heads up.
What's a mini box? You obviously know more about this than I do.
I have no idea.
I can tell you, I have had Baby Clydesdale hot sauce, and it is outstanding. A really, really good locally made sriracha sauce, and you will never go back to regular sriracha sauce ever again.
Good to know.
All right. So we have a lot more comments, but let's get to these news articles that I have been promising for the last 24 minutes. All right. So Fed Chair Jerome Powell said he does not think the U.S. is currently in a recession. And Derek, you mentioned this several times about how, you mentioned a couple different things, but the one thing that kept standing out over and over again in this article and what I keep reading and hearing today is that the jobs market is doing well, considering, if you look at everything, there are definitely signs that we could potentially be in a recession or moving towards a recession. But if you're looking at jobs, which should be one of the main factors, jobs are doing pretty well.
Well, technically, recession means that growth is recessing, meaning that you're contracting, right? And so it's 2 consecutive quarters of negative GDP. We've technically been in a recession since July 1st. We're going to get the official number on GDP tomorrow.
Yeah.
Jerome Powell is saying this because of politics. You can see in their statement, there's always like one sentence that he's clearly been told to say. And you can see it in their write-ups too. Sentence. Yeah.
Because no one reads past that.
Someone is coaching him on saying some of these things. Because if you take, well, what is a recession? Well, that's what it is. It's 2 negative quarters GDP in a row. It's not, the economy's bad. That's not what recession means. And for decades and decades and decades, this is what their definition has been. And if you look at any of the Federal Reserve charts, which have a bunch of really good charts, including mortgage rates, home values, all kinds of stuff, you look at any of the charts, the recessions are always grayed out vertically on the timeline so you can see what areas were recessions. Those recessions are defined by two negative quarters of growth, or if you don't get back into the positive. So it's when you go to negative and then until you get into the positive. That's how long those last on those timelines. So we're definitely in a recession. That's politics right there that you're seeing. It's not reality. A lot of that going on lately, unfortunately, but that is definitely not true. We are in a recession. Now, that doesn't mean recessions are terrible. That doesn't mean that people are going to be, in dire straits. It just means that we've contracted for a couple of quarters on growth. That's all, after massive, massive growth for like a decade straight. It's not that big of a deal, but let's be honest with ourselves. Let's call it what it is. It doesn't mean that home values are going to drop by 50%. It doesn't mean that hundreds of thousands of people will lose their jobs. It could, but it doesn't automatically mean that. So we need to see it for what it is.
Doesn't mean a housing market crash, people. That's all we meant to, that's all we came on here to say. That's all we wanted to say.
Basically.
And the thing I keep hearing over and over again is they are dead set on wanting inflation to get down to 2%. So it sounds like they are going to continue to raise the Fed rate until they get to 2% inflation.
That's always their goal, is 2% inflation on paper.
Michael says, when investing in a 2 to 4 unit, how do you account for appreciation on cash flow negative property? Basically, it will take at least 3 years for the cash flow to hit zero.
I can tell you my answer on that.
Yeah, go for it.
I don't. So I do not account for appreciation. If you're buying a cash flow vehicle, it needs a cash flow. If it doesn't, it's not a good deal. Yeah. Even if it, like if you're looking at something like, okay, well, hey, it's San Diego, so cap rates are low. They should still get 4 or 5%. Shouldn't be negative. If it's negative, the price is too high or the rents are too low. So you need to investigate both of those. Hey, are they just not getting enough in rent? What are actual market rents? That you could be getting if you were the new owner and you were correcting the rent situation. Where does that put you? That could be one way to look at it. Or, hey, what's the price here? The price doesn't make sense, for what the rents are. So I would definitely not factor in appreciation. That's one of the grave mistakes that happened actually before the crash, was people were buying homes based on the idea that it was going to appreciate. Never expect appreciation. If you're buying a piece of real estate as an investment, appreciation should not be what you're interested in. The depreciation is nice, that you get to write off against your income, but you don't want to be factoring appreciation into your decision at all.
Yeah, it sounds like you're trying to justify negative cash flow, which is definitely not a good idea. If you are factoring in appreciation, then I would factor in forced appreciation, a property that has great opportunities to add an extra bedroom, add an extra bathroom, things that are going to force appreciation up. And this keeps happening. So I'm going to switch on to this. And Derek, you keep talking on it.
So yes, I would definitely not factor that in. That's not something that makes sense to do. If you want to look at good investments from, a cash flow standpoint, they're definitely out there. So you don't have to settle for something just because maybe it seems for some other reason like it's the right one. It's got to make dollars and cents.
Yep. Cabs, or you can't afford to buy, so it's not a bet per se. Yeah. Look, you probably mentioned this, or you probably wrote this right before we had discussed it. I mean, yeah, absolutely. It's easy for us to say, hey, go out and buy a house. It's easy for us to say that. And we know that there are more challenges than that, and that certain people can just straight up not afford to live here. And unfortunately, I have friends. I bet you have friends. I bet, Derek, you have friends that are moving out of San Diego or recently moved out of San Diego because they want a path towards home ownership and they don't see it happening here. And that's super unfortunate. And, I don't have any solutions for that right now, but that's,
here's the solution. You have to, your real estate strategy does not have to be immediate. So
that's true.
You don't need to say, well, okay, if I can't buy a house by the end of the year, then I'm a loser, or I'm incapable, or I'm screwed long-term. No, what you have to do is you have to make a real estate strategy. That strategy involves, okay, what would I be pre-approved for now? Just income-wise, if I had the down payment. Let's say I don't have the down payment. Okay, so that would mean this. All right, cool, got it. How much do I need to save? Okay, then I need to make a plan to make savings. You just have to put yourself on a path to get there. Everyone can do it. Maybe you can't buy in San Diego. Maybe that's just going to be too rich for your blood for one reason or another. But most of the time, it's been very, very rare. Someone who has regular employment reaches out to me and says, I want to buy a home eventually. I don't care how long it takes, but I know I need to be on the path. I come up with paths for those people. So it can be done. But if you're not able to do it now and you're not taking steps in the right direction, then yeah, you may stay there where you will never be able to. Take steps in the direction where you want to go. That's all you got to do. And make sure you're taking it. They can be baby steps, but you got to take steps.
And I know it seems really hard because of the way that the market has been in the last couple of years, but I think it's pretty evident that we're very likely not going to see 20% appreciation again this year. So it gives you the opportunity to start building your way back. The last 2 years made it feel like, it was 20% appreciation and then 20% appreciation year over year. And, it just makes it feel like it's impossible, but it's not always going to be like that. So you could have an opportunity, like Derek said, start to really work on your plan and start inching your way towards homeownership. And maybe it's not going to look the way you thought it would look originally, but it could help get your foot in the door so that you can use that as an opportunity to eventually get to the next place.
Here's an idea on that thought, Dan. You've got CalHFA out there for everyone here in California. You can do an FHA loan for 96.5%. You can get a silent second from CalHFA for 3.5% if you fit in the box. You just need to not make too much money. And you can basically buy a home 100% financing. Right now is the market where that could actually happen. You could actually find a seller probably who would be okay with that. So that's what we mean when we say opportunities in this market. It's not just opportunity for like investors who have tons of cash to come in and do this. No, this is the perfect first-time home buyer market right now, because you are able to actually go negotiate, get concessions for closing costs, do a down payment assistance program, do an FHA loan, and not be, just shrugged off and swatted away right away. So you can do all those things. And then maybe you don't get the rate that you love, but then a year or two from now, you refinance, get the rate that you love. Now you have the house that you love and you have the rate that you love. So that's what we mean by opportunity. For if you don't think you have a down payment, but you have income and you have a job, you just haven't saved money for a down payment, there's still a possibility if you can pay for closing costs that you can actually buy a house, even if you're not VA. Pretty crazy.
We have my man, Justin Conoco with Prime Real Estate Brokerage out of London, Ontario, Canada, is calling in and saying, Dan the man, appreciate you, my friend. Let's go. These guys know their stuff. Appreciate you, Justin. You are a good man. I appreciate you. Christian said, please make the rental hikes stop.
They're going to get worse.
They are going to get worse. That's the unfortunate thing. They're going to get worse.
You can count on it.
Okay. We'll get back to some of these. There is one article that I think you are going to love, Derek. This is going to probably be your favorite. All right. U.S. facing perfect storm for 2008-like housing crisis. Here's my favorite line. And just tell me your thoughts on this, Derek. Torres said, this crisis is largely fueled by a construction boom that lasted throughout 2021, even though construction has slowed this summer, and a lowering demand for housing. He described this phenomenon as a misalignment of timing between supply and demand. How do you feel about that?
Well, there's some areas, I think, where you may see things like that. Yeah. Like, for example, there's some rural areas in Missouri that I like personally for investments, and they started building too many $400,000 and $500,000 houses. Sure. And in these areas where houses should be $200,000-$300,000, and so those guys might get caught with their pants down. Totally possible. But you can't say that is a trend that's going on all over the country, particularly not in San Diego. But San Diego's not like most places. Yep. So there are some areas that are going to get hit, and new construction is probably the worst litmus test to, because first of all, the new construction, the builders, they are not known for timing the market well. That's a fact, right? And also, they are the most likely to drop prices and provide incentives, at the tail end of their construction life cycles for these different neighborhoods, because by then they've already made a profit, and they can sell those last few homes are just all profit, so they can haircut them if they need to. They don't want to, of course, but they can. So they're really not the market. They're just one interesting little segment of the market. And they have definitely not built as many homes as we did before the crash. Before the crash, there were 12 million more there were 12 million more homes than we have today. Or no, there was 3 million more homes for sale, and we have 12 million more households today. So the builders are way behind in actually catching up to the glut that was created after the crash, where builders just got to cut it off, they're way behind. We need 5 or 6 million more homes than we have right now today. And if household creation continues at this pace, it'll be even more as years go on if they don't catch up. So yeah, we're way short on units as far as housing is concerned. So yeah, while the home builders may experience some pain because they are selling the most expensive product, on the marketplace. I mean, they're at the top shelf, when it comes to homes. So yeah, they may experience a little bit of pain, but the builders will be fine this time around. They'll be fine. And hopefully they'll remember next time not to alienate realtors. It just does them no favors. It's such a stupid policy. And they all do the same thing every time in unison. So ridiculous. So yeah, I'm not worried about the home builders. You shouldn't be either. And anyone who tells you that the home builders are going to crash the market isn't paying attention to actual inventory numbers and didn't do any research at all about what those numbers look like back in 2008 versus what they look like today.
Yeah, last year in San Diego County, it was the first year, I think, since the housing market crashed in 2008, 2009. And second time, or it's the first time last year that we've had over 10,000 new homes be built in San Diego County. And it's not even close to where we need to be. I mean, we need to be building 40,000 new homes a year here in San Diego County. I know, where are we going to put them? There's not a lot of solutions for that, but that's what we need in order to meet up with demand. And we're not just talking about demand for buying houses. We're also talking about that demand for rentals as well. So that could not be any more untrue here locally in San Diego. And that's another part of the reason why when you see these national headlines, it doesn't mean that what they're talking about relates to San Diego. And there's a lot of differences in that. To say that this crisis is fueled by a construction boom, I get it. There are places that they've had a decent amount of construction, but I would say absolutely more places than not. That is not true. And that's not what causes housing crisis and the situation that we are in. So it's the exact opposite. It's that we need more homes and there's not enough supply and there's way too much demand. So yeah, I read that. I read through the article. I'm like, I have to bring this one up because it's hilarious to me. Let's see. Owner? Very good point. So I don't agree with the assessment. There are unrecovered costs associated with buying a house, interest payments, tax, HOA maintenance. So just talking about, if you're paying $3,600 a month on rent, that would all go towards the equity in a house. And yeah, absolutely. It's not going to all go towards equity. You have all the things that you mentioned on here. But again, that rent could go up every single year. And that mortgage that you're paying on the house is only it's going to stay the same. The property tax is going to marginally go up over time. So there definitely are a lot of other factors. We're playing it very simple with our analysis.
Yeah. Now he's saying unrecovered costs. Yeah, interest you pay on the home, assuming you itemize your deduction, should be tax deductible. Yeah. Real estate you pay also should be. Yeah, HOA and maintenance aren't, but the maintenance you can actually write off. The maintenance costs, if you are careful about and talk to your CPA. I'm not a CPA, but if you're careful about keeping receipts and keeping track of your costs in your home, any money that you put into your home on anything, you can deduct that from your profit when you sell it to not pay tax on it.
Yep.
So you don't have to pay tax on that part of the profit that you make, should you need it. So there are a tremendous amount of financial benefits, all of which you get zero from when you rent. So it's hard to make sense of renting unless renting is dramatically cheaper. If you could rent a house for $1,500 that costs $5,000 a month to own, then you kind of look at it and go, okay, well, maybe renting is the safer play to make here when I do all the numbers. But when it's not that big of a difference between the two, owning a home just financially on paper, mathematically, is going to make dramatically more sense, especially when you look at how it gets better over time, because less of your payment is interest and more of it is principal, every single one that you make. And over that period of time, we know what happens to real estate value. So you get none of that when you rent. Sorry, brother.
But very good points. It's not just, there are other costs that you have to think about as well, even though there are tax benefits. There's a lot. We could do an entire series of videos on breaking down the analysis between renting and owning a home, but definitely worth considering. Christian agrees as well. Montas asks, building ADU, is that the current best investment? I mean, it's hard to just say a yes or no. There are a lot of factors that are involved with that. Are you looking to rent out that ADU? Are you going to have family live in the ADU? Are you flipping a house and trying to sell it? all these are all the things that you need to think about. Building an ADU, they've made it easier in San Diego County, and every city is going to have kind of different rules and regulations. But I know in the city of San Diego, they actually have plans ready to go for ADUs. But then how difficult is it going to be to actually build that? Maybe it'll take a year, maybe it'll take 2 years, maybe it'll cost you $200,000, $300,000, $400,000 to build that ADU. So it's a different analysis for everything that you're doing. If you're looking to flip a house, it's probably going to take you way too long to build that ADU. Or if you need cash flow right away, it's probably going to take a little bit too long to build that ADU. But if you are in a home that you plan on living in for the next 5, 10, 15, 20 years, and you're willing to build an ADU onto your property and rent that out either long-term or short-term rental, because you qualify for, I believe it's tier 1 in the city of San Diego, and you can rent it out as a short-term rental, you can get a lot higher nightly rates than you would for a long-term long-term rental. And over the long term, it's going to make you money, and it's going to increase the value of your home if you ultimately sell it. So I don't know if it's currently the best investment, but it's definitely up there. It definitely should be a consideration if you are in the situation that I was just mentioning.
Yeah, it's way up there, way up there. Hard to find something better, just because of, let's say it costs you $300 a foot to build it. Going rate right now for detached properties is like $650, $700 a foot on average. So, you have kind of a immediate equity on it, plus the opportunity for cash flow. If you can finance it, if you have a way to pay for it, that's where you really have to try to make sense of an ADU. If you don't have the money, obviously it's not an option. If you can get it, but you have to do a cash out and then take a higher rate than what you currently have, and you have to factor all that in, and then the cash flow kind of washes. And so there's a lot of things to figure out, but I run those numbers for people almost every day. So happy to do that for anybody here who's listening.
And so here's the other thing. Let's say you are a homeowner. You've owned your home for the last 2 years or more. You have equity in your house and you want to build an ADU. Like, give us the quick rundown. What are the options? Like, you don't have to just pay cash for that. Can you pull equity and money out of your house?
Totally. Yeah. I mean,
setting you up with a softball here, Derek.
Yeah, totally. You can, a lot of people are doing that, especially, veteran homeowners do the VA cash out. And, you can go up to 100% if you want to, which you don't need to in most cases. There's so much equity out there. But yeah, if you are a conventional financer or an FHA financer, also cash out's opportunity. You can take it. The reason that people don't do it right now is because the rates are higher. So like they have the 2.5 or 2.75, and then you want to go to a 4.5 or a 5.5 if you're conventional on a cash out. It's tough. It's tough to do that because we have to factor that in now to the cost of the money, not just what is the amount that we're cashing out. How much is that going to cost at 5.5% or 4.5% or whatever, but also what's the delta between your base mortgage payment now versus what it was at the lower rate. And we have to add that into your cost of capital. So it can be in some cases, it makes tons of sense. In some cases, it's like, that's pretty expensive. And we got to really look at what can you get for rent and see if it's going to make sense and pencil out at the end of the day. Some people are Airbnb-ing those though, making it a lot sexier from a number standpoint. So I think again, it's one of those things, you build an ADU, do it right. Like use ADU Geeks or one of the ADU companies. I don't think you're going to be mad about it. I don't think you're going to later on be like, gosh, I wish I hadn't built that ADU. I think you're going to be like, damn, I'm glad I built that ADU. It's making my property worth more money. I can cash flow money. I can Airbnb it. It's incredible. My buddy has an ADU on his property in Encinitas, and they rent it out. And he says the rental from the ADU pays for the whole mortgage.
Yep.
The ADU rental pays for the whole mortgage. It's a $2 million house in Encinitas. It's a nice place. And the whole entire mortgage is paid for by the Airbnb other ADU, which is just like on the other side of their garage. Like it's not even a big deal. So it can really make sense in some cases, but definitely case by case.
Yeah, I mean, there's just so much to factor in. Like, how easy is it to build an ADU? Is there a detached garage that could easily be converted into an ADU that's going to save you a lot of money? Yeah, there's a lot of things that you can factor in. I also know people that house hack and they build an ADU, they live in the ADU, which is going to be much smaller, and rent out the big house and actually make cash flow off of that. So yeah, there's definitely some good opportunities there.
Sure.
Justin is talking a little bit about the rental thing that we were talking about. So he is saying that totally understanding from both perspectives, but just shining a little bit more light on the analysis when you're running rental versus or renting versus owning. All right, we have a lot of stuff on the rental here. Man, we're gonna have to do a rental video.
Let's do it.
Let's see. Let's see here. Victor says, I see it like that. Also, the price history on Zillow gives me a little bit of insight. More than anything, I learn about the value of certain parts of town versus others in price increase percent wise. Yeah, I mean, when you can start analyzing how the prices are going up in one area versus another. You can even go on to Redfin, although I've had issues with their numbers, but they have a market center, and you can actually look at year over year appreciation of homes. And I would pay more attention to the communities and the neighborhoods and the zip codes that have had more than 20 or 30 homes sold a month, because when you're at a smaller number, it's going to vary too much. But if you're looking at neighborhoods and zip codes that have sold at least 50 or 100 homes a month, then I feel like those numbers are going to be a little bit more accurate. You're welcome, Christian. What do you think of 55 properties for rental as far as buying a 55 plus property and renting it?
Is that mean like senior communities or like 55 plus communities? Right?
Yeah.
Probably right, Lyndon. Yeah, those are interesting. Very interesting. A lot of them, there's very strict rules. So you have to check and see, like, not just about who can live there, but the HOAs are more strict than usual.
Yeah.
So talk about rentals or Airbnbs.
Very active HOAs.
Yeah, you got to definitely check out the HOA rules on those. But if you can find one that's open to non-occupying owner, then that could be a really good rental opportunity. It could be a great rental opportunity.
Yeah.
But I think that's going to be hard to find. I think they really want owner occupied in those communities, and they really want people who fit the age bill. So it may be difficult to find them. But look, there's no shortage of opportunities. If you want to buy income properties, there's tons and tons of different ways to go about that. I keep seeing people keep sending me great stuff. I mean, like all day. People are sending me stuff like, what about this one? What about that one? I have all kinds of investors who are looking at buying stuff, hawking the market right now. They are getting deep into it because there's opportunities. And they know sellers. There's a few weak sellers out there who really need to move stuff, and they're just trying to find them. They're just on a hunt for motivated sellers, and they've been finding some. So, when we say opportunity is there, that is exactly what we mean. But for as far as like income properties, you don't have to try to figure out what the sector is before you start hunting. You can hunt and find deals that might be in all sorts of different sectors. You might find a multi-unit over here. You might find a 55 plus community over there. You might find an entry level, home in Claremont or something over here. So just be open to those possibilities if you're an investor, to all the different ones that might be out there. Investigate them all until you find something that you like. That's all you got to do.
Derek, are there any specific zip codes that require fire insurance?
I think most.
I think they all do, right? It's going to be a lot more difficult to get it in certain areas versus other areas.
That's why we have the California Fair Plan. So if you're in a fire area where like someone won't cover you, then there's California Fair Plan, which basically is like an insurance company underwrites one policy, which says, hey, everything but fire. And then California Fair Plan is a separate policy that you get that's through the state, which you pay for just for fire coverage. And you attach those two together, and now you're fully covered. So even if you're in a high fire hazard area, California Fair Plan is available, and you can get coverage. It's not too terribly expensive. So that was a very good thing that the government did to help with those areas.
So keep those questions coming in. I just can't seem to get caught up on them, but I have been promising that we're going to talk about some market data. So let's do that, because that's very exciting and sexy. So this I really wanted to pull up here. This is from Reports on Housing, and this is the San Diego County active listing inventory year over year. What I promised you guys is that I'm going to show you that what we were talking about 2 weeks ago is happening today. It's happening right now. We're finally starting to see the data, because again, the data is always delayed. It's never what we're seeing on the ground floor. When we're noticing that buyers are, there's fewer and fewer buyers out there. When Derek and myself had fewer and fewer buyers all throughout June and starting into July, we started to feel that before the data started to show it. And one of the things that I was talking about on my last live is how when we're looking at active listing inventory, we're looking at the amount of homes on the market. Yes, it was going up at a crazy rate between May and June, and then all throughout June. And if it kept going at that rate, we were going to get up to 7,000, 8,000 homes before you knew it. I mean, in just a short couple of months, and that would have really had a massive, massive effect on our housing market, especially if we would have gotten above that purple line up there, which is 2019. We would have started to get really into a neutral market and start to get a little bit closer to a buyer's market. The problem is, it's easy to project when lines go straight, but we have seasonality here. We have seasonality all over the US. There's always going to be more people selling their home in the summertime than they are going to be selling in any other time of year. And that has to do with schools. The housing market is kind of led by people that are looking for certain school districts or looking to wait for the kids to get out of school before they start to make a move. And I think what we started to see this year was that not only is that the case, but it was even more dramatic because a lot of potential sellers thought that we were hitting the top. Like, all right, we're hitting the top. So in like May and June happened, like, all right, we're hitting the top. So we got to throw our home on the market now. And what we're starting to see is what we were predicting on the last live is that this is going to start to flatten out. The amount of homes is going to start to flatten out. The non-serious sellers, the non-motivated sellers that just were trying to get top dollar, but actually weren't really that motivated to sell, are starting to pull their homes off of the market. And the active listing inventory is starting to flatline. How do you feel about that, Derek?
Yeah, it looks like it's rounding off nicely there into the middle of the total range there since 2019, just right in the middle of it. And also you can see, look at all three of those years. How does the second half of the year go with inventory?
Exactly.
That's the big thing that I'm seeing. I mean, really the peak, most of these years, it looked like it was May in 2020, but that was a weird year. But for most of these years, you see the peak is kind of like right about now. And then it really starts to trail off. So if you look at even just 2021, it rounded off nicely right where we are right here, and then just sort of petered out throughout the rest of the year. So if that continues, then you're going to see the normalization here over the next month or two, and then we should see inventory decrease. If that couples with rates dropping, as I think that they will, or at least holding, as I think that they will, then you have a situation where the market could heat up very quickly, and all of a sudden, then we could be back into its multiples on everything again. Like that. That's not an impossibility.
Yeah.
It seems like it. If you're listening to a bunch of like crash talking YouTubers, like that's an impossibility. It is not impossible. It may not be the most likely scenario, but is 100% on the table. So that's why we hear us encouraging people who are FHA buyers, VA buyers, down payment assistance buyers, to get pre-approved and get yourself at least in a position where you could pull the trigger if you found something that really made sense for you and fit your budget and so forth. Because if the market heats back up again, and you might get pushed out again.
Very, very solid points. And I think this is going to kind of bring it home as well. So now this is San Diego County demand year over year. And how they're tracking this is how many homes go under contract, how many homes get into escrow with an accepted offer. And you can see the orange is this year, and it started to drop off dramatically. And what Derek and I have been saying, and a lot of other people have been saying and experiencing, is that a lot of potential buyers in the market, absolutely, there were some that were pushed out because of affordability, and they just straight can't afford to buy a house. They can't afford to buy $1 million house at 5.5%, 6% interest rates. But a lot of the people that I've been experiencing, that I've been talking to, that got, I don't want to say pushed out of the market, but just decided to hold off for a second, they still can afford to own these homes. They just got scared. They got worried, all this talk about a recession. They got worried that more homes were starting to hit the market. And over the last 2 weeks, they've all started to come back out of the woodwork, and more buyer leads and more buyer clients have been starting to filter back in for me. I know it's been the same for you. Is that right, Derek?
Correct. Yep. I have people coming out of the woodwork. There's a bunch of people who were, not even engaged in the market. They're seeing what's going on. They're like, wait, we have motivated sellers out there now.
Yes.
Let me go try to put something together. So we've got a bunch of people doing stuff like that, hawking properties, looking at tons of stuff, looking for deals. They're going to find one. If you look hard in this market, you're going to find one.
Yep.
And so, that's kind of where, where it's at this point in time, is there's people who are, I see more savvy buyers, more of the investor type buyers, the burr buyers. Those are the people who are really coming out in force right now. And there's just a overall a sentiment that things are going to get bad. We should stay away. So right as things got good for buyers, the majority of buyers sort of step out of the way.
Yep.
And that's kind of how, sociology, mass psychology works. It just, unfortunately, everyone kind of does the same thing at the same time. everyone's going to come back when rates drop and all that stuff. We know that's going to happen. The question is, what are you going to do in the meantime? What are you going to do with an opportunity in the market? What are you going to do with a situation that has finally gotten better for buyers? This is, it's still a good time to sell. Don't get me wrong. I've been getting beat out still, Dan. It's not like we're getting every house. I don't want to make it sound like anyone can just go out and get a house. We still get beat out. People with 20% down conventional that still get beat out. So it's not like you're just automatically going to be able to go get whatever house you want, but at least there are some options where, hey, these guys have been on the market for 2 weeks and they don't have an offer. Oh, hey, how about that? And we like the house. Cool. There's a situation that could work out really well for you. And those are happening finally.
And it really depends. And this is something we've talked about a lot before too. It just depends where specifically you're looking in San Diego, because you look at San Diego as a whole, but then you look at these specific neighborhoods like the Rancho Bernardo, Rancho Penasquitos, Forest Ranch area is hot right now. It's still very hot because we're having a lot of tech companies. Apple's about to open up their 5th office over there. We have Google, we have Amazon, we have Intuit, and it also is an area that it has highly ranked schools. So we have a lot of demand and prices continue to go up. So it really just depends on specifically what neighborhood you're looking for. I'm also seeing a lot of people that are like, all right, well, now is the opportunity to get by the coast like we've been wanting and we didn't think was possible. So I'm seeing a lot more demand for the areas that are along the coast, the more high demand areas with less inventory. So yeah, it absolutely depends on where you're looking. But this chart is really good. So, again, we're looking at inventory, which is going to be supply. It's starting to stabilize. And if the other years, if the previous couple of years tell us anything, it's going to start coming down. And then if you look at the demand, it sharply went down because people were worried, they were concerned. And now we're starting to see it very quickly start to pick back up, which is really interesting. And I don't know why I keep freezing on you here, Derek, but my camera is not liking me today. Seems to be when I switch it from full definition to 720, it starts to work again. So here I am.
There you go. Hey, you got to figure it out. We're all figuring this thing out together.
All right. So we have a couple more questions here, a couple more minutes. You good for a couple more minutes here, Derek?
Sure. Yep.
Okay, cool. So Victor says, I'm no professional, but I think area of town or pockets like South Park help appreciation greatly. Yeah. So I think that's kind of what we were just saying. It's not, you can look at San Diego as a whole, but it's way more important if you're looking to buy a house and assuming how much competition you're going to have is to look at the specific areas and having someone, working with someone that can help guide you through knowing which ones are going to be more hot and more competitive than others. Alex says, hi guys, from Connecticut, lived in San Diego for 4 years and loved it. How's Connecticut though? It can't be as sunny and warm. We got a lot of kind of sexy comments over here that I'm not going to promote. I'm sorry.
Oh no, they got you. They got to you.
So my good friend Bern McGovern is tuning in, I think from Mexico right now.
What's up, Bern?
It was pretty funny because we both accidentally did a live last week at the same time. And we had a lot of upset comments of people thinking that we're not friends anymore. It's okay. Bern, myself, Courtney, we're still friends. We're going to continue to do lives together. We'll probably do a 3-way live and bring Derek on one of these days, and we can all discuss what's going on. Lyndon says yes. I don't remember what to at this point, but thank you for agreeing with us. What are how do you say that name? Mantis? Mantis says, what are some good approaches for finding off the market deals? My first question would be, what exactly are you looking for? Are you saying off market just because you don't want competition? Are you saying off market just because you want a deal? Because you don't have to find off market right now to find deals. That's the most important thing to know. Off market deals are a lot harder to come by these days because the rules and regulations are a lot more strict for real estate agents as far as what they can and cannot promote. Basically, myself as a real estate agent, if I tell someone publicly outside of my brokerage about a home of a seller that is interested in selling, but I don't actually have a contract with them, then I'm legally bound to have that property under contract within 3 days. So yeah, I mean, there used to be a lot more opportunities for off-market deals. You still can find them. You could go door knock, you could cold call, you can do all these things. But there are a lot of companies out there doing that. So there is competition to try and get those off-market deals.
Yeah, it just depends on what competition you want. Do you want competition with the other investors who are trying to get off-market deals, or do you want competition with other buyers who are trying to buy properties off the market? You're just picking your poison there.
Yep.
Unless you have some sort of system or some sort of edge, on the investors, they're going to be tough to mess with. But I mean, one thing you could look at, Mantis, is contact some of these big investors. See if you can get a wholesale deal from them. I mean, maybe they'll say, maybe I know a lot of investors right now who would love to wholesale some deals because they got too many deals on their plate. The market softened up. And they got 35 homes now, and they're really in over their heads a little bit, and they would love to wholesale 10 of them. What that means is they bought it, right, for, bottom dollar. They had plans to put it together and refurbish it and do all these different things. But now they don't want to go through all that. They'll just sell it to you and they'll make 10 grand or, charge some small amount on top of it. And then by doing that, now you've gotten the deal plus 10 grand. Hey, great. That's probably better than you'd be able to do on your own. And you didn't have to do any of the work. They did all the work, all the marketing, sitting down with people at the kitchen table to get the deal in place. So maybe look to wholesale some deals from some investors. That might be an opportunity for you.
All right. And as we do every single time, we have the Spaniard tuning in today. Oh, wait, I think I hear the Spaniard. Is that you, the Spaniard? The Spaniard said it's called the American dream because you have to be asleep to believe it. George Carlin. I guess that is a great quote, George Carlin. So you want to put in an ADU to live and rent out your house? Come on, man. The Spaniard, we appreciate you.
I wouldn't do it that way, but you could.
That's the thing. I wouldn't do it that way. But if I was in my early 20s and I was able to get my foot in the door on a home and build an ADU, or my mid 20s, and I had this desperation to want to build wealth through real estate, that is how you get started. You have to make some sacrifices up front so you can build equity on your house and you can actually cash flow while living in an ADU. That is possible. Do I want to do it? No, absolutely not. You don't see me sitting in an ADU. But for the right person, especially early on in their real estate investment career, that can help leverage you to be able to buy your second investment property.
Yep, it definitely could. So, I mean, look at your options that are available. Definitely check it out.
Cool. I think they like that one. Oh, how do I stop it? Derek, I thought you'd be way more impressed by my noises here today.
I like it. I like where you're going with this.
Lyndon says, thanks. You guys rock. No, Lyndon, you rock. Victor says some of these townhouse type condos in nicer communities were really nice, so it was hard to believe. Do you remember what he was talking about?
He's talking about the condos appreciating, not as much, but it makes sense because when you're buying those newer condos and townhomes, they're so expensive to begin with. You're starting at the very, very, very top echelon of like price per square foot, so it is harder for them to appreciate.
Oh, I had missed his last one. All the professional advice I was told turned out to be very true. Taking a look back reinforces the advice given. Even the nicest condos don't appreciate how they come. Yep. Got it. Absolutely. I mean, the most common request I get from buyers, people moving to San Diego, people living in San Diego, wanting to buy their first house or second house, is going to be a single family home with 3 bedrooms and 2 baths. Those are going to be the highest demand, the most competitive homes. And I think people end up with townhomes or condos because they can't afford the single family home. And unfortunately, a lot of those people, they would rather rent than buy an attached property. So yeah, it's definitely true. At Anur Atan, exactly. All right, we got a fan of Anur there. And Hugh Liu says, "What is the best website to search for first-time home buyer programs?" Derek, take it away.
CalHFA, yeah, Cal CalHFA. Just Google Cal HFA, and you can read all about it. There's a whole bunch of stuff, really good stuff. Or you can contact me if you want to, and I can tell you. But if you want to research it on your own, go CalHFA.
Yeah, contact a really solid lender, and they can run through. They have access to all these programs for you, and they can help run you through and give you all the options and help you figure out what is best for you. Keep in mind, and Derek, let me know if I'm wrong, because I am not a lender and I do not know the loan programs anywhere near like you do. I don't have access to all that stuff. When I have people asking about loan programs, I say, hey, talk to this professional over here. But a lot of the first-time home buyer programs there's pluses and minuses. It's not like I'm a first-time home buyer, this is going to be the best option for me. They're going to give me a bunch of free money. A lot of times it's supplementing the down payment. So if you don't have a lot of funds for that down payment, it's going to help you get in with less money out of pocket.
Yep,
Like,
exactly.
Right? Is that close?
Exactly. And there's a bunch of different ones. So depending upon your income and what zip code you want to purchase in, you have to figure out kind of which ones are going to work.
Victor says, when are you guys going to have ice cream at the park like Ann Schrobiger? Schrobiger?
We don't do those kind of videos, Victor.
I guess I'll have to look up this video. It's sounding very interesting.
Well,
my friend Jeremy Knight just had ice cream truck at his open house today. Unfortunately, MTS site says they don't go to that area. South Park, I think, is what he was talking about. Okay, cool. Well, I think that's about all the time we have for today. Derek, I think we're doing a little recording tomorrow too, right? I get to see a lot of you this week.
Yeah, we are. Well, you're going to come to the studio next week, right?
Oh, is it next week?
Mm-hmm.
I guess next week.
Yep.
I'm glad I said that because I'm gonna have to fix my calendar.
It's next
Derek,
Wednesday.
How can people get a hold of you? I do have your channel down in the comment section below. Yeah. So definitely check out Derek's channel. He has 5 years running now. He's been putting out information multiple times a week about what's going on in the real estate market and kind of financial advice for real estate. And definitely go and check that out. But if someone wanted to talk to you about, talking about a loan program that is best for them, what's the best way to reach out?
Just my email on the screen right there. That's the easiest way to get to me. That'll always work. It'll always forward to a working email address for me. So just hit me up there and I'll answer your questions, give you a quote, whatever it is that you need, and help you out any way that I can.
Awesome. And follow me on the Instas. This little guy right here, Dan P. Best Life SD, so you can get some behind the scenes looks at what's going on in my life and the people that I am helping. Derek, I appreciate you so much, man. Looking forward to doing this again very soon.
Sounds good. Take care, buddy.